Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis, and I believe we have a special guest on the line already, Tom Hugard. Trader Tom, are you there?
Yes, good morning.
Good morning, Tom. We've got a question from two of our listeners asked the same question. How are you handling all of this news regarding the coronavirus that's coming out of China? How do you handle that? Do you follow what's going on, or you disregard it? What's your plan?
I'm handling it badly. Yeah, I am. I'm thinking, why is this not affecting the market? I'm a human being, and I'm concerned. I live in Northern Europe, and we have had very few cases, but I find myself exerting a kind of behavior that is resembling a little bit of a state of a panic, because I'm thinking, well, I'm no spring chicken anymore, and I would rather not bump into one of these viruses, because I'm not sure that I would handle it so well. But from a trading point of view, I keep trying to find places to short, and yet, I'm not down badly for the month, but I am in negative, and which is not something I experience very often. And I find myself every single time that, yesterday was a prime example. I came to work in the morning, and I see the chart pattern. I'm thinking this one is going down, and I short aggressively, and I must be down. I must be plus 300-400 points between the DAX and the Dow and the FTSE, and yet I see it go all the way back up, and I get absolutely nothing out of it. And not only that, the DAX then charges ahead. The U.S. indices makes all-time high. I'm thinking, well, am I the only one who's reading the stories out of Asia? But I don't know. I don't know if it's because you feel that you're secluded in America and you feel, well, this is not going to affect you. But when I speak to friends, for example, in shipping, they're saying that their numbers are down quite significantly. When you read the impact on travel, you see it has a significant impact. Even someone as close to home for you as Ralph Lauren is saying that half his shops in China has been closed, and it will have a somewhat detriment. Although this is not, I think it has a 4% impact on his overall bottom line. But there surely must be others than just Ralph Lauren that has exposure to China, and why the indices can make all-time highs. I'm probably going to look at these charts in a few years from now and saying you should have just stayed with the trend there because it was a bull market. But there you go. It just goes to show that even though you've been a season in this game for a while, you can still be impacted emotionally from news, even though the charts is telling you something else.
Okay, that's really probably the answer that they wanted to hear. I certainly wanted to hear it, because I felt pretty much the same way. How could the news be this bearish and yet the market goes up? So you can't fight the news, that's for sure. Tom, do you have anything that you'd like to share with us today?
Is there anything in particular you want to ask me about? I was short Tesla, the question, and maybe there's a little story in there, because I don't know what went on in Tesla on the 4th of February, but we had a tremendous, it seemed like a short squeeze, but then just before the close, Tesla corrected some $100 in a straight line. And I remember seeing, funny enough, it was a video that you gave me quite a few years ago. It was an interview with Paul Tudor Jones, and he says that when the market makes a violent reaction in one direction or the other, that's the market trying to tell you something. So just before the close, I shorted Tesla. Not in a big position. It was 1,000 shares. Well, that could be a big position in some people's eyes, but it didn't seem like an enormous position. And that turned out to be a really, really good trade to make, even though it didn't feel very good at the time, because you're shorting something that had already fallen about $100, and it didn't sit very nicely with me. But I remember one of my friends, the guy that you shared the stage with in September in London last year, here, Dr. David Paul, he said often the trade that feels the most uncomfortable to take is the right trade to take. So I think that's the only little story I got for you today.
Oh, that's really good. We have one question from one of our listeners. And how do you prepare yourself mentally each day? Do you have a mantra that you go through, or do you meditation? Do you have a specific routine that you do, Tom?
Yes, most certainly I do, and I could spend the next 2 hours telling you about this. In fact, although it may sound a little bit like a marketing ploy, it surely isn't, because I've been giving my book away for free, but it's actually being published in May, June time this year. And in there's this program that I follow. It's a program that I developed myself, but I really would love to tell your listeners about it immediately. It's not going to take me much more than a minute or so. I have developed a PowerPoint. I've developed a PowerPoint presentation that I go through every morning. And in this PowerPoint presentation, I have the before and the after of the trades that I have taken. Plus, there'll be some inspirational quotes that I like to live by, because I really do believe that habits comes before goals. So I got to establish the right kind of habits. But our mind is a drifter. Our minds drift from the things that we would like to achieve, because that's just the way that the mind works. So every morning I go through this, what I call it, like a mental warm-up. And the purpose of it is basically just to get my mind into the right frame of mind of how I want to trade. And the way I achieve that is I look at some of the trades that have really, truly disgusted me. Some of the trades where, the market has been flying higher and I've been shorting it all the way up there. Those are the kind of trades that I want to remind myself that I don't want to take.
Wow.
And now my daughter's just voted. I'm really sorry about this.
Tell Mika I said hi. Hey, Tom, we got a caller in from Tim in Cleveland's asking, Tim, are you there?
Yes, sir.
Hey, could you go ahead and ask Tom
your
your question?
It's kind of like a follow-up from something you said, I think, last week, where you have the setup for Thursday, and if Friday closes higher than Thursday, then you have a 95% chance on Monday. I was just wondering if that follows through when we have a holiday on Monday to Tuesday, because obviously we're not going to be able to trade on Monday.
Yes. So the statistics on what I call the Thursday-Friday pattern is very clear. That is that if I see a market that is incapable of taking out the highs made from the previous day, that will in 90%, I think actually it's 95% of the cases that I have investigated, result in lower prices on the Monday. Now, you ask a very good question then. What happens if the Monday is a holiday and the market is closed? Well, obviously, my sample space in days where the next day's holiday is much, much more restricted. So out of the perhaps 10 years that I investigated, there might only be a sample space of about 10 days where I have this phenomenon occurring. But and there, unfortunately, it's not statistically significant, meaning that it could go either way, 50-50. So I wouldn't rely on this pattern if there's a bank holiday Monday.
I was just wondering if the flip side on that Thursday-Friday thing is also true, that if Friday is actually down, whether it's a high percentage that Monday is a down day.
We'll have to take a break here. Tom?
Yeah, I'll hang on.
Oh, you will hang on? Okay, because I don't want to interfere with your trading.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks. We're talking with Tom Hugard and also Tim from Cleveland. Tim, do you want to continue your question that you had a follow-up for Tom?
This is on the same lines of the Thursday, Friday statistics that you took. I was just wondering if Friday is actually down, whether it was significantly significant that Monday, then the following Monday would be a down day. In other words, the reverse of your 2 up days.
Okay, I better just make sure that you're not going with half information here. If I, during Friday's trading session, observe towards the close that the Dow or the S&P 500 is incapable of trading above the highest point established during the Thursday's trading session, and this is not in the Globex session, this is purely in what we call the regular trading hours, then there's an overwhelming high statistics that we will trade lower on the Monday. It doesn't matter whether how the Dow trades or the S&P trades during the Friday, as long as it doesn't get above where we are on the Thursday.
Understood.
Does that answer your question?
No, what I was wondering is the reverse of that. If in fact the Friday doesn't make it above, is it significantly?
It does.
Did you find your stats showed that Monday would be a down day? In other words, the reverse of the Friday being higher.
There's not the best of line. So did you say that if the Dow gets above the highs made on the Thursday?
No, if on Friday the Dow does not overcome the Thursday high, does that mean Monday will be a down day?
Yes, but that's the pattern that I've described all along. If Friday is not able to get above the highs on Thursday, then the statistics suggest, very overwhelmingly statistics suggest that we're going to get a lower Monday, at least at the open.
I'm sorry. I didn't know whether the reverse would necessarily be true, statistically.
No.
As well.
So there's no statistical validity to, for example, say that just because we closed higher on Friday than during Thursday, then we will get an up Monday or a down Monday. But the whole scenario with investigating the weekdays is incredibly fascinating. I'll give you another example. I found with very high statistical validity not as high as what I call the Thursday-Friday pattern, but I found that if Tuesday is incapable of trading above the highs of Monday, you have very high odds of trading lower during the Wednesday. And while I use technical analysis like everyone else uses a technical analysis, I find that this kind of statistics gives me a little bit of a roadmap what I can expect during the specific trading days. Of course, it doesn't happen all the time, and there's times when I'm expecting it to happen and it only happens a little bit, and then I have to reverse or turn around. But nevertheless, I find it incredibly invaluable, and someone with good computer skills, some that I unfortunately do not have, would be able to automate this and investigate it in a far bigger pace than I'm currently able to.
Tom, thank you so very much. You've actually made my investing life a lot smoother by many of the things you've said. So I just wanted to say that, not just these things, but just the mindset that you've instilled and projected. I just can't thank you enough.
That's a big compliment. Thank you so much. I appreciate that.
Yeah, I'll send him the $20 when we're done here, Tom.
Hey, you can double that for me.
Okay, thanks for calling in, Tim. One more question, Tom, and we'll let you go. And that is, with the cabinet changes that are happening in the UK, does that factor into your trading at all, or you just disregard it?
Oh, I'm just disregarding it. I mean, I've had to anyone who have been remotely following the Brexit, not scandal, but the story, knows that there comes a point where you just can't get excited about that anymore. And they finally got it done. The cabinet changes. Look, unless I'm trading, say, the sterling against, say, sterling dollar, it doesn't affect me. It didn't particularly affect the FTSE 100. So it would only be if I was trading sterling and I saw a short-term knee-jerk, but the sterling is trading back down again today. So do you know there's still people who think that sterling to the dollar is going to go below 120 if they're opting for a hard Brexit?
Mm-hmm. Yeah, I'm sure there are people thinking of all kinds of things over there, just like they do here. Hey, Tom, we want to thank you for coming in, my friend, and we'll have you on again soon. And tell Mika she can have full concentration of you right now. So yes. Give her a hug for me.
Thank you for the invitation. Yeah. I'm sorry about that.
No, it was perfect. They loved it. Thanks a lot, buddy. We appreciate it.
Thank
Trader
you.
Tom, folks. We'll have him back on again. The mindset of a trader, always interesting. Now, we're going to have Tim Bost on at the half hour, which is always going to be good. And next Thursday, folks, you don't want to miss it because we're going to have Sim Only on, and he's going to be talking about the plight of the farmers, what they're doing with the tariffs and all this other stuff. And I think that'll be real interesting, to listen to. And then hopefully we'll have Bill Meridian on at the end of the week next week is what my plan is. I did want to share with you something from Shane that I thought would be interesting. This is the by the way, Mercury goes retrograde here on the 17th, folks. Thank you, Marshall, for reminding me. I had it written down, and this is a Mercury speed index that Shane uses, and as you can see here, that he believes in between now and the 26th, which is coming into way into next Wednesday. So there's a possibility that you could have a little bit of sell-off here in the market. That's basically a combination of looking at what the Fed has been doing, and then also with that Mercury speed index, as the way Shane described it to me. So we'll see if that has something to work with. But that Mercury retrograde is going to be really interesting because Mercury is a planet of communication, and when that thing goes crazy, you don't want to be. And when you're in retrograde motion, you shouldn't buy a car or sign any major papers because it usually is messed up. President Reagan, he and his wife, mainly because of Nancy, they had Jeannie Dixon as their astrologer, as I recall, and they didn't do anything on days. They signed all the contracts at the best possible time, and not many people believed that, but they flat did. And I think it's in one of the autobiographies of the couple, but I'm not exactly sure. Now, I did post a chart here earlier about the Valentine's bouquets that they have in Hong Kong, as you can see here. It's with the mask and all of the antiseptic soaps and ethylene sprays and stuff like that for your hands. And believe me, folks, that stuff is really hard. The price of masks over there are 10 times the price that they are here, if you can get them, and it's very, very difficult to get them. So something is not being correct about what's being reported over there. All I can tell you is people in Hong Kong are very, very afraid, and just that they are in China too, from what we understand. And yet we don't see that in the news here at all. So maybe it's just fake news like we hear all the time. So we won't know that. But a year from now, we'll probably figure out what happened. But that's neither here nor there. When we get back, I will post. Well, in fact, during the break, I'm going to post the charts for the DAX and the FTSE like I always do, and then we'll have Tim Bost on. It's always very entertaining. One of the big guys that's always in the Timer Digest rankings, in the top 10. So that's good. So, and then we want to post a chart of the Hang Seng here also, folks. Very interesting chart.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, with Tim Bost of Bradenton, Florida. Is that correct, Tim?
Oh, yeah, we're near Bradenton. It's right across the river, and Palmetto, actually, which is not far away.
Okay. All right. All right. Why don't you, Financial Cycles Weekly, why don't you take over the mic? I think you've already posted your slides into TFNN, so you've got total control over it. So why don't you go right ahead?
Okay, well, let's talk a little bit about this coronavirus situation, because I've been tracking it, as most of us have. and seeing some very, very big swings in the markets depending on the latest reports of the spread of the disease and how many dead and how many countries are affected in the cruise ships and whatnot. So we're getting an increasingly complex situation going on here. And it's quite clear that this is having potentially at least a major impact on the global economy, largely because of the interference with supply chains from China, but also there are other ancillary things that are starting to have a ripple effect with this, and we expect this to have an ongoing impact, perhaps as strong as actually showing a downturn or a recessionary trend for the first quarter of this year on a global basis. So it's definitely a serious situation. So we've been trying to look at this from its implications from an astrological standpoint here. And it's interesting, as we talk about this, it was originally identified as the Wuhan virus, because the first cases were detected in early December in Wuhan, China, and it is known as the novel coronavirus, and has most recently been designated as COVID-19, COVID, for the coronavirus disease number 19. So that's the official designation. But what occurred to me here is the similarity in many senses with the flu. And, it is a respiratory kind of ailment. It is viral and virally transmitted. And, of course, the flu is our shortened version of influenza, which is a very interesting word. And historically, the influenza was thought to be caused by the influence of the planets. So it's actually an old astrological term for diseases. And so for me, as an astrologer with a historical bent, that's kind of fascinating to see that implication here as well. So what we've done is taken a look at some of the origin charts for the disease. It's a little bit uncertain. I'm using a chart here shown on the 90-degree dial of the first case acknowledged by the Chinese government. It was in early January. They announced that the disease had been detected, and they cited the first case as having occurred on December 12th. I think the subsequent research has shown that there were some unidentified cases a little bit earlier than that, so there's more research to be done. But essentially, in examining all this, what we're seeing are astrological influences that make it very, very clear that what we have going on here is something that has potentially a very, very big impact. It certainly shapes up to show the kind of dynamics in terms of quarantines and so forth, shutting off of communities, and we've seen that enforced on a massive, massive scale in China, and starting to see it elsewhere as well in terms of restricting travel and keeping people at home and literally arresting them in some cases to make sure that they don't stray afar and spread the disease. So we're seeing a chart here that indicates potential for global effects. I think that's already being borne out. Surprising impact, and of course there are signs in the chart as well showing strong governmental action being necessary to deal with this whole situation. But all question. I heard you pause there.
No. The question.
Okay.
We're not seeing your chart. That's the problem.
Oh, you're not seeing the chart. Okay.
No,
okay.
that's the problem.
All right. Well, sent them over there and didn't get. It looked like it went through from this end. So, anyway, we won't talk about the chart specifically then because there's not much, but we can talk about the implications without that.
Tim, can we talk just a little bit about I hate to interrupt you, but someone's asked a question about Mercury retrograde coming in here on the 17th, Monday. How do you handle that as far as this stuff?
Well, we always look at Mercury retrograde periods as a potential for a counter trend in market activity. And certainly this period here from the 17th of February through, I think it's the 9th of March, we'll have Mercury in retrograde motion. So we're extra cautious in our trading. what I've been looking at here is the direct station at the end of the Mercury retrograde on March 9th, and we're seeing that occurring at a degree position. The last time we had a direct station from Mercury at that specific degree was in 1941. So I'm looking at some correlation there with early stages of World War II dynamics that may apply to some of the global tension dynamics here in the current situation. So generally speaking, from a trading perspective, we want to be extra cautious with order entry and make sure that our communications are all in order when Mercury is retrograde. And we also look for inversions in market dynamics and surprises and fake outs along the way. So it's time for extra caution in trading in general.
Tim, we have a question from another gentleman, and that is Dennis from New York would like to know if Pisces being in the house here of Mercury, will that affect the crude oil quite a bit?
And we do expect it to have some impact on the crude oil. That retrograde begins in Pisces, and Mercury actually moves back into Aquarius. So we'll be watching those dates when Mercury transits in retrograde motion back into Aquarius and then moves forward after the retrograde period. It'll turn direct at 28 degrees of Aquarius, so it'll be a little bit later in March when we see that the completion of the cycle there. So watch those times, especially when it crosses that 0 degrees Pisces point. For impact on crude trading.
Okay, that's good. Well, Tim, tell the folks how they could reach you, and we're going to have you on again soon to see how all this stuff works out. Are you still doing okay for the Timer Digest? You still up there in the top 10?
Yeah, we're still ranked. In fact, they did their annual issue, and we're actually among the top 10 for the last 10 years. So that's a nice add-on to that as well. Folks can reach me at financialcyclesweekly.com is the best way to get connected. We also have a free webinar coming up. And that you can get to at bit.ly/Astro Now, and it's capital ASTRO, lowercase NOW.
Hey, thanks for being on, my friend, and tell your lovely wife I said hello, and I hope you have a wonderful spring and don't get too much rain down there. Like sometimes you get pretty inundated down there.
We're starting to rain today a little bit here, but it's washed away some of the red tide anyway. That's good.
Is there still red tide there at all? Is there still some red?
Well, we still have some flare-ups down a little south of here toward Naples, but the potential's still there. We keep dumping stuff in the ocean that makes it happen.
Well, Naples, Winsky can handle it. They got a lot of money down there.
Yeah, he's right. That's his territory.
Thanks for calling in. We really appreciate it, my friend.
Thank you,
Tim Boss, Financial Cycles Weekly. We'll be right back, folks. 877-927-6648.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, JDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, folks, we're going to hold on here a second. I got a message coming in here. All righty, we'll see what's going on here. Just give me a second here to get this up here. There we go. You'll notice here, this is the chart for Bitcoin, the daily. We've broken above 10,000 finally, folks. We remember that number we were looking down there at 6,400. That was a 61% retracement on the shorter term time frame, but on the long term, going back when Bitcoin was $100 a share, that was a 382 on the log scale. We mentioned that. That was 6,400. And it was also, I don't know if this is ironic or not, but 6,400 is where the Dow was in March the 5th of 2009. Shut the front door and raise the rent. If this stuff doesn't work, who knows? Anyway, this last little ABCD is a 3-drive pattern. If you look at it really close in Bitcoin, from the middle of around the 14th, this is a daily chart. So you'll see there in the middle of January, we had that one there around the 18th. We came down the end of January. Top 2 pulled down in early February, and top 3 was 2 days ago. So it's going to be interesting. Once we get above 10,800, and who knows what that's going to be, it's going to be a very, very clear sail up to 13 or 14,000. And remember, 13 or 14,000, folks, is not very far away from the old high at 19,000. So maybe these cryptocurrencies and blockchain have something, up their sleeve. So we'll wait and see, as we look at some of these things going through. I did want to bring one thing to your attention that we talked about before, because Tom alluded to it, and that is the fact that the business shipments that passenger transport stuff coming out of China is much smaller. Now, I want to share something of human interest, folks. We chat with our friends in China every day, and in Hong Kong, and they're very scared. But they sent us a video that was really amazing. It was a train ride between Beijing and Hong Kong. It's about a 4-hour ride on the speed train, and it is filled all the time. And they sell seats where you don't have a seat on the train. You just have to stand up. There's only a few of them, but they sell those. So this video shows that the train's getting ready to leave, and the man comes on, and he's a little old man with a cane, just like Casey Ruggles with a little mustache, and white hair. He has no place to sit down, and he's hobbling, and you can see he's in great deal of stress. And as he walks down, no one will give him eye contact because they don't want to give up their seat. And finally, he comes up to this lovely young girl, and she says, "Here, sir, take my seat." And so he says, "No, I don't want to do that." She said, "Look," she says, "you're younger than me, and I can handle this." And so he sits down in the seat, and they go on. And as the train goes on, you'll see that she's hanging there on one of those little leather things, holding on. And it's late, and so they're about halfway through, and they're falling falling asleep, and the conductor's coming through, picking up, the tickets. And he comes up to the gentleman that's sitting down, and he has no seat, and he sees that he is sitting in her seat. And he says to her, he says, "My goodness," he said, "it's awfully nice of you to do this." He said, "Look, we have one seat left in first class for the last half of the trip. Would you like to come up and sit there?" And she says, "Oh," she says, "I would really like to do that." And here's where it gets interesting. She reaches up above where the luggage is, and she pulls down her crutches. And she gets on her crutches, and she starts walking through the aisles, and the people are absolutely amazed of what's going on. So it makes you want to wonder that you have to be prepared to, to give back, in life, because that's really it. And it's really, really good to pay it forward. So anyway, that's the moral of the story, is do something good for somebody else, and you'll always be a lot better. That's for sure. No question about it. Folks, we got gold very near the old breakout point here of 1585. If we can get gold to close above 1585, let's just check and see where we are right now. We're at we got up to 1584.60. Woohoo, very close. So that's going to be an interesting one to pay close attention to today. And of course, we have crude oil has gotten up to that 52.26 level. We were looking at that to get to possibly just under 53 in the crude oil. We'll pull the chart up for that. And I don't have the gold chart. Maybe I do. Let me double check here. I did it so doggone many times that I guess I don't. No, by golly, I don't. I'll try to bring it up before the next break if I possibly can, because I'll see if I'm able to do that. We're not going to worry about it. There's nothing I can do about it. So I'll get the crude oil. Let me get this crude oil, because this is the one that's interesting. We're almost at the 61% retracement here in the crude. Let's get it up here. You'll notice here that's at 52.50. Watch that. If we can get above 52.50, and we've been very close today, folks, just like the gold at 15.85, we're very, very close, and we're very, very close in the crude oil. But if we go blasting through there, that's going to mean a whole lot. That's telling you that these things have actually made a very significant bottom, because you remember we went down below that key level at $50 a barrel. We went down to, $49.27, and here we are now $3 a barrel higher. And it could have trapped a whole lot of people in there. And also, last night, natural gas. I don't know if you followed it very closely, but remember we got up. We were looking at the buy down there at 1.75, 1.76. We got all the way up to 1.86. We backed off last night to 1.79. And you'll never guess. This is a trick question, boys and girls. So pay attention. What do you think that ratio was when it got down to 1.79 last night? It's a point, and then there's a 618. Mr. Z has won the prize, and God bless you, Mr. Z. Perfect 61% retracement, and then we exploded to the upside, and we're on our way. I would raise your stop to 1.79. That way you're going to lock in a little bit of a profit, and if it reverses, you don't want it anyway. So keep that old cash register running, and let's see if we can get it to move pretty good. But we're going to have some increased volatility in all these markets, no matter what. So the key thing to watch is to see how well, they bounce off these levels. Now, the news coming in, most probably what will happen, and this is from an old experience, there's going to be some really good news coming out of China regarding the virus, okay? And that'll be the thing that makes the market go down. I know that sounds stupid. Well, and I have a PhD in that, but that's usually what'll happen. I've seen it so many times. I've told you a story before. One of my most frustrating days is I was in short beans, and they were supposed to be limit down. They opened about 10 cents lower and went almost limit up. And I had sold them several days before, so I still had a profit in them. I got so upset that I went to the movies. I just didn't even want to see it, because I thought that maybe I'd miss the whole thing, and I put my stop in so that I would break even. So when I got back from the movies, the market was closed. It closed about 7 or 8 cents off of limit down or limit up, and so I still had a profit. But I said, well, I'm going to blow it out tomorrow. The next day, she gapped down and just collapsed for about 2 weeks. So things like that happen. Why they do, I don't have the answer to that, and nobody else does. Tom mentioned that when we were talking to Tom Hugard. He tries to, just do the best he can, and he said, he doesn't look at the politics at all. That's got to be a good thing. That's what I would think. What I will do here is when we get back from the break that we're going to come up with now, I will post this gold chart so we can take a look at it, because we're getting really, really close. Okay, folks, we'll be right back. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Basil Chapman will be hosting a 90-minute live webinar for subscribers to his daily trading service, The Opening Call, Thursday, February 13th from 4 till 5:30 p.m. Basil will host his live webinar titled The Dark Cloud Cover, an Essential Market Analysis. In this 90-minute webinar, Basil will discuss the techniques he uses when identifying market downturns using his Chapman wave, including how he uses specific ETFs like the SMH Semiconductor ETF as a canary in the coal mine leading indicator when looking for market downturns. By identifying particular weaknesses in the market technicals, Basil's able to identify the severity of the market reaction, and this is just one of many topics he'll be covering. To sign up now for the opening call, visit the front page of TFNN.com. Don't miss out on this special 90-minute live webinar with Basil Chapman, Thursday, February 13th. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I just wanted to post the chart here of the gold. You're seeing here at 1584.85. Very, very important area. It looked like it's breaking out, and it certainly could be. That's the main thing that we want to keep our eye on. The one thing I did want to bring to your attention here is this is what the AI is showing for today. We're going to know here in a few minutes whether it's going to be right or not, but that 1585 is a very, very interesting thing. Now, Dennis is asking a question about palladium. palladium. I happened to look at palladium today, Dennis. We had a very, very nice little 3-drive pattern on the 15-minute chart that ended up at, I believe, I can't remember the last two. The 71 was the last number. I think it was 2371, if I'm not mistaken. But we've made a new high since that time. So I don't see any 78% retracement to the highs. It's a new high ground, the way it looks like to me. But maybe I'm looking at it the wrong way. I was only looking at a 15-minute chart. So I hope that helps. I don't trade palladium because it's too thin. I have a good friend that certainly does and does a pretty good job at it, but I don't do that. So that's what I'm watching here. So remember, folks, we're getting to see some incredible volatility here. It's going to continue. It's going to get even worse. And don't forget, we got Mercury going retrograde on the 17th, and that always throws a little bit of a wrench into what's going on in the market. So we'll watch that to be looking at. I hope that helps, Dennis. But I don't recommend, if you're going to trade a metal that starts with a P, use platinum because it's tradable. It's got great liquidity. Whereas, gosh, you get in that palladium sometime, and you get spreads that just absolutely scare you. And it's $100 a point, so it's not for the faint of heart. So let's sort of watch that, I would think, anyway. So the key level in that crude oil, folks, is 52.70. We get above 52.70 in the crude oil, and that thing could have game too. So, and we're right at 15.85 in the gold. So we'll see what happens with that as we go through the troubles of life, and we'll see what's going on. Anyway, thanks for joining us today. I enjoyed both of our guests as usual, and we'll see you guys on the flip side on Tuesday. Everybody takes the day off.